Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these in my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. There had been here one dominant pattern that 21 weeks ago took a break on the downside. It is of course the late August 24 to late February 25 ascending triangle pattern. This pattern had the requisite combined 5+ touches and is made up from a lot of smaller patterns within it, but parts of the main pattern can still be seen on my daily chart. 22 weeks ago I laid out targets below for this pattern, with a primary target down at 226 and the secondary hardest reach target down at 194. 20 weeks ago prices reached the primary target, but we kept shying away from that 200 level, enough that I chose 6 weeks ago to retire the secondary target at 194. This has left us with some other interesting patterns to look at. The first is the renewed strength of the bright red realigned March 24 to date uptrend, currently at where are we, around about 204. Yeah. This has been tested a number of times since its establishment back in late May, including today, but so far has held. It is interesting that the purple middle time, currently 205 of the mid-March to mid-May bearish shift pitch group, runs through the bright red uptrend late next week. And if there was ever a time when you need to knock out two supports at the same time, then that would be it. So I advise you caution ahead of a possible further testing on the downside. Now, I highlighted this 3 weeks ago when I said, and I quote, I'd watch this bearish shift pitch walk, especially the middle time, as we seem to be running out of time. You see, what I mean is that the middle time crosses down through the bright red uptrend in about 4 weeks. So that's now next week. And I continued. At the end of July, and I suspect before then, something will have to give. Add to this the pressure from above from the mauve medium moving average, currently at 213.5, and the static 50% absolute Fibonacci line, and it may be that we see a test down towards the July 2021 low at 197.25. Watch this space. And that's the end of the quote. Minneapolis wheat. The sideways triangle over February to May had run this market lower in mid-May, but then we saw the impact of the slightly realigned September 2019 to date uptrend, way below the market, which is currently at 575.25, as well as the congestion below at 578.75, and that turned prices higher, with the added impetus of a changeover gap higher in mid-May. The market rested for a bit, just over the mauve medium and gold long moving averages, currently 615.75 and 615 even respectively, creating a small bullish half hesitation that 7 weeks ago reached its target on the top side. We next had a dip, creating what in the future will be referred to as the first shoulder, before another rally in early June, reaching up to probably the second most important feature here, the November 2017 high at 665.75, just under the 50% Fibonacci line of the May to August 24 move at 669.5. And that one's the most important. These two resistances were responsible for the highs back in February this year and October last year, and they helped realign the dark blue downtrend above, dating from July 2023, and that's currently at 647.25. So we drop from these resistances down once more, forming what will become later on the head, all the way to the combination once more of the mauve medium moving average and gold long moving averages, but bouncing up a second time, all the way this time to only just to the dark blue downtrend and the 650 to 651.75 congestion, before being rejected again and falling to form what will become known as the second shoulder. This week we have dropped down below the combined mauve medium moving average and gold long moving average, seeming finally establishing itself below these two supports that are now resistances. All this activity has formed what is a possible late May to mid-July head and shoulder pattern, as you can see on my daily chart, with the bright red neckline currently at 605.5 being pressured from on top right now. Now in most cases this pattern would be a bearish reversal pattern, thus head and shoulders top. However, we do also have a head and shoulders continuation patterns, a rarer pattern, but one that still exists, and right now we haven't made a confirmed break of the neckline, so I can't tell you which it would be, but I can give you an idea of the size of the move once it happens. Thus, for a break lower we would have a primary move below the neckline of 23.5 cents, with a secondary harder to achieve move of 50 cents. I would add a caveat to the move lower to watch out where the September 2016 to date uptrend is at the time, as I think that might lead to a possible higher or secondary target. For a break higher we would have a primary move up and away from the neckline of 23.5 cents, with a secondary harder to achieve move of 50 cents. I would again add a caveat here to the full move higher to watch out where the July 23 to date downtrend is at the time. That's the dark blue one. Finally, I've spoken in recent weeks of a possible bow tie formation of 3 of the moving averages made about 5 weeks ago. This is a scrappy bow tie formation with the mauve medium moving average and the gold long moving average not crossing over properly, though they came awfully close. I have kept an eye on that pattern idea, as we are now in the time period when we might expect volatility or a move to start. So if we only look at the past 2 weeks, we have seen a tendency to head lower, and I wonder if this scrappy bow tie formation is the one responsible for that, or one that will benefit from that. London UK feed wheat. There had been on this daily chart for about a year one major significant pattern here, a pattern that we have not seen in the other grain markets. It is the bright red late May to early July bearish shift pitchfork. The market in late February this year reasserted the then dominance of this pattern, with prices breaching, then repairing an attempted break higher over the bright red upper time at the time. That's currently at 169 even. Add to this the earlier this year narrow mix overhead of all the moving averages, though they are now separated out, as well as the important, even today important, and I will discuss this shortly, 50% absolute Fibonacci line at 180.5, and you had, and even now still have, an area overhead in the 180.5 area that is a significant resistance. The next big feature is the twofold key reversals down we saw in June. The weekly key reversal down mid-June and the subsequent monthly key reversal down for the whole of June. These bearish patterns have been overtaken by an even bigger move, a bullish move higher that also broke the back of the bright red bearish shift pitchfork, whilst also pushing up over all the moving averages and, importantly, over the neckline, currently 168 even, of 2 very important long-term patterns which I will shortly discuss. We had a gapping higher changeover move in early July that now sees prices challenging the 50% absolute Fibonacci line once more on the top side, the one I spoke about earlier, as well as coming closer to the purple July 23 to date downtrend, currently at 183.20, and the September 2021 low at 181.70. We have since this move stabilized just over the 50% absolute Fibonacci line and seem to be getting ready for whatever will be the next move. The first feature this new move has created has been the opportunity to make July a possible immediate countering monthly key reversal up, if only just. Thus, if on Thursday the 31st of July we close either above 157.20 or under 136.60, then we'd be on. Anything in between would have a lesser outside month pattern. Right now we're most definitely looking at an immediate countering monthly key reversal up. This all leads me to my final 4 points, the same 4 points I've been discussing for months now. 3 of them were something that I noted back in my annual commentary back in January on London feed wheat. To see these, it is best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 23 to date cat's ears pattern. This is a bearish pattern, akin to a double top formed after a big fall. such as the fall we had in earlier in 2023, as well as an even longer term second pattern, an August 2020 to date very large head and shoulders top pattern. These two super long term patterns both rely on one single feature, and that is their common neckline, highlighted in dark blue on my daily chart, and that's currently at 168 even. Thus, a primary target X3 for the bearish cat's ears pattern will be down in the 127.5 zone, just below the bright red and big old 2005 to date uptrend, which is currently at 131.30. A secondary hard to reach target X4 will be down in the 112.85 zone, around where the dark blue lower trend line is currently, which is 113.75, for the 2007 to 2022 ascending expanding wedge pattern. For head and shoulders top, we have an even lower primary target X5 down in the 64.20 zone, closer to where sits the oldest uptrend I have on any of my 200 or so charts. The 1975 to date, yes, half a century old uptrend. The 1975 to date uptrend currently at 65.90. I am not even going to give you my secondary target. It's harder to achieve target for this pattern as it's below zero. Please bear in mind that these are very longer term targets stretching possibly over many years, but they are still targets below for these patterns above. Now, that all being said, this month with changeover we have a major spanner in the works for such longer term patterns. The reactionary, possible immediate countering monthly key reversal up for July has so far gone back above the purple neckline and stopped for now just underneath it, but stopped for now at the breach 2016 to date uptrend, currently at 178.20. The question is whether this is just a reactionary single month move higher or the beginning of something else. For now, I will stick to the reactionary single month move higher, but I'm prepared now to start looking at the possibility of a new base of support, not only being built but also being exploited for a possible move higher. There is one caveat to this, as we have also created since mid-2023 a big bear channel, currently 135.15 to 184.10. Even with such a big reactionary move back up, we are still sitting within this big bear channel, and it does have the advantage of having at least 5 touches necessary to legitimize it. Those have happened. For all this, I need more data, as we are dealing here with very long-term patterns. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.